I like to start off with what have we done over the last 10 years? So I got out the Aussie dollar returns for investors. I looked at Aussie equities, international hedged, international unhedged, and emerging market equities. And I know for my own superannuation, I'm a little bit set and forget. And certainly many years ago, I had as much as 30 or 40% in emerging market equities as a much younger person with a bit of a 10-year view. So I like to take a 10-year view. And I was pleased, despite sort of the noise over the last few years, that over 10 years, emerging markets outperformed Aussie equities, international, hedged and unhedged. Right. That's a 10-year cycle, and if we're all here for our clients who are, on average, got a pretty long time to retirement, I was glad that the emerging market story made sense. If you look at 1, 3, 5 and 7 years, particularly the last 5 years, emerging markets have underperformed. The good news is that they've all had absolute positive returns, and over the last really 7 years, you've been better off in international of all stripes, whether it be hedged or unhedged. So there's a couple of messages there for Australian investors that emerging has underperformed. So you need to think about that over the long haul. Maybe you're getting to a point where it gets attractive. Secondly, that Aussie equities, having been more or less a great performer over 100 years, over the last few years has not held up vis-a-vis the opportunities you can get offshore. And we'll talk about that, but I think those sorts of figures put it into perspective. Themes are changing, China's changing, so I think diversification becomes more important, and if you didn't buy it 3 or 4 years ago, now's the time to start having another look.